Hey everybody, before we dive into today's episode of the Ag View Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today.
Hello and welcome to this week's Ag View Pitch. We're going into a new marketing week for the week of, you know what? I'm not even thinking. What's next week, Steve? What, March what? March 10th,
March
right?
10th through the 14th.
Yeah.
Yes.
Geez, I'm struggling today, I guess. I don't know. So who I got with me is Steve Georgy, president of the Allendale Incorporation. Steve, how are you doing today?
Doing fantastic. You know, it's been exciting. It's been an exciting week, last few weeks anyway, and certainly excited to see what's going to hit us ahead.
Yeah, we have not been short of headlines and a bunch of stuff going on, have we?
No, not at all. You know, it's one of these things where you're like, how can this change?
Yeah.
Right. But it's a big swing when you talk about these headlines. It's not like something you have to guess. It's tariffs on, tariffs off. Yes, we're going to allow certain things. Yes. I mean, it's like a hard stop and then a hard on, you know what I mean?
Yeah.
So it's one thing that the markets certainly are playing both sides right now. And, you know, you've got to be tied to the media at all costs, just because you never know what's going to be said, how it's going to be said. One guy says something and then the next guy comes in, totally contradicts yourself. So yeah, it's an interesting time that we're right now.
That sure is. So, you know, I guess we'll start off with headlines. All right. And you talked about a tariff. So, you know, I was reading this morning that, you know, there were certain types of goods we weren't going to put tariffs on with Mexico and Canada. What's kind of going on with all that?
Yeah, you know, it started with, you know, looking at the auto industry, that we were going to open up tariffs coming back in to the U.S. as far as automakers and cars. And then it was that, hey, Mexico is doing what they're asked to do, and we're going to take the tariffs off of Mexico. And then it was, well, if we're going to do that, and if you're complying with USMCA or, you know, with the agreement that we currently have, yep, well, then what we'll do is we're going to kick it back and reevaluate now on April 4th or April 2nd, I guess is what it is.
Yeah.
So
somewhere in there.
Basically kind of kicked everything back, right? But that was so different from if we just saw what happened earlier this week, right? And it was like tariffs were on and here we go, right? But the emotional side of what these markets are doing when you see these headlines, and it's just run this way and then run that way. And, you know, as of right now, I think the more and more we start seeing these headlines, the less and less the market's going to stop kind of caring as much, just because of crying wolf as much as we have been.
Yeah.
But as of right now, right, you get this mentality that we're looking at kicking the can again. So these countries around us are doing things to comply with what we're asking. But here's the big elephant in the room, right? When we talk about tariffs to Mexico and to Canada, there's a player in here that's not saying anything, and that's China.
Yeah, yeah.
So, and when we start looking at really what a trade war, right? We go back to 2018 and we look at what had happened. Well, in 2018, right, it was all China, and then we got into that trade war. But now we don't really know how they're going to retaliate. We're not sure. Their economy is already kind of suffering. So this is one thing that we have not talked about. The media wants to cover what we're doing with Canada and Mexico more so than China. And I think China is kind of that big elephant in the room that we do have to talk about a little bit.
Yeah. Well, you know, I don't remember who I was listening to, Steve, but somebody was saying that, you know, that their purchases have gotten to record lows at this point in time. And, you know, just overall globally, they were thinking because of the economy, how much purchasing they've done, you know, they're thinking they're in a pretty good position to kind of ride this thing out. So I don't know if there's truth to that or not, but that was one perspective of somebody I was listening to. I wish I could remember who it was.
Yeah, but you know, you talk about riding, you know, how long are we going to ride? We don't know how long the storm's going to last. This storm could last for 4 years, right?
Yeah.
When Trump came in 2016, we didn't start talking tariffs until 2018. And then we know what happened 2020, things kind of came off, whatever else. There was a phase one agreement that took 2 years in order to come to that they didn't even do a sliver of what they said they were going to do during that.
Yeah.
So not only that, you look at what China has done over the last several years and putting a lot of money into South America, putting money into Brazil, Argentina, looking at trying to help them as far as getting their exports and building up their economy. So you can tell that they're definitely going toward the route of South America. And so I feel like the U.S. farmer, though, has done a fantastic job finding a way in order to utilize, if we're going to specifically talk soybeans, we're using more soybeans internally now versus what we typically would have to export, where we just don't have to export as much because we're finding uses for it.
Yeah. Yep. Well, I think that maybe brings me to, I don't know if this is headline number 2. You and I didn't talk about this, so I'm kind of putting you on the spot here. If you saw the Trump's address here, and he talked about, specifically called out the farmers, said, I'm here for you farmers. We're going to have a good ride. If we if we're in a trade war with Mexico, we're in a trade war with Canada. Where's our demand going to come from that he's talking about? Is there things that we're not thinking that we're seeing that is cooking in the on the back burner that's coming to light? I guess I'm trying to think of where this ride's going to come from.
Yeah, and to finish what he said, right, is that we will have to have an internal use, right? And he did say to have fun. So,
Yeah.
you look at it, you're like, where's this fun? Is it fun? Is it fun
Yeah.
to see pricing do what it does, But here's the thing. I think when we do talk about it internally, something that we know that can flip a switch is going to be, what do we do on biofuels, right? That's
Yeah.
still lingering out there. And here's the thing, because I'm kind of with you on this, and I don't have a solid answer for you, to be completely transparent, because the way I see it, we've got our trade partners, really not happy with us. Mexico's our number one buyer for corn. And you've got China, number one buyer for soybeans. So to find these internal uses, what are we going to do? We know acreage is going to be up in corn, probably a little less in beans. But if we can't sell this, we know price goes down, right? It's
Yeah.
just supply and
Yeah.
demand. You got bigger supply, less people wants it, it goes down, right? So I'm not quite sure. We got ethanol efficiency that is up. So we need less corn in order to produce ethanol. But not only that, if we're going to get into a drill baby drill type mentality, right? And that's his term.
Exactly. Yes.
If we get into a drill baby drill type mentality and we see that we've got now pressure on the oil market, which we have seen, we now are going to have ethanol, which needs to be that savior-ish for corn, now competing with cheap fuel.
Yeah.
So when we use 5.3 billion bushel of corn a year into ethanol, now all of a sudden, maybe we don't need 5.3. That's bearish. That's not bullish.
Yeah.
So I'm not quite sure. I'm completely honest with you. I'm not. That one kind of got me too. I'm not sure what that looks like, but I do know that if we are going to talk more of a biofuels, whether or not it's airline fuels, things like that, that would be more of a, are they going to put a mandatory use on certain amount? I'm not sure, but that's the only way that I see that working internally.
Steve, I'm glad you brought it up, because I thought the same thing. If we're drill baby drill, we know those, that competes with ethanol. And so that kind of takes that margin and that use ratio where you don't need it as much. Residual feed with Mexico and China are going down, and that's where I'm going. I don't know where it comes from. So I'm glad to hear I'm not the only one thinking about it. I guess that I wish we all knew that there was something coming down the line that that was going to happen. So, but anyway, so I guess those were the 2 headlines I thought. As far as going on, I mean, what anything else you got on in major headlines that you want to cover?
Something that we are going to get probably heavier into in the next few weeks, right, is what's going to happen here at the end of this month. This acreage situation and everything else, right? And so that's starting to be more of headlines as you get more of your private sector, if you will, guesses coming out on this stuff. So when you look at what's happened, right, all this tariff information came out, and I'm going to specifically talk corn for a hot second.
Yeah,
But
go
if
ahead.
you've got that and you say, okay, we saw that corn had backed off the way that it did, and it's not catching as much strength as you might think if tariffs are off. We sold off because tariffs were on, not rallying anymore. It's almost if we're looking at this scenario we have on this acreage side, USDA's Ag Forum, right? They came out, that was a hot topic here last week. That next thing you know, they come out 94 million acres for corn. So
Yeah,
they've increased, 3 to almost 4 million acres for corn. They took that right away from beans. But what they've done, though, is that they're usually conservative. So now the market is saying, oh no, what happens? Are we talking 95, 96? I even heard someone throw a 97 at me. So
yeah,
I don't know, but it's probably going to be bigger than 94.
yeah,
So
yep,
that would be looked at as a little bit negative here, and rallies need to be sold if that's the case. So
yep.
but those are some headline things that are going to make it, they matter as we
Yeah,
move forward.
no,
And
they
so it's
100% do.
not just tariff talk. Yeah.
Yeah, I mean, you and I were talking a little bit before. I mean, Chris,
Hmm.
right now has said his soapbox is, has been up to this point, with talking about crop insurance,
Yeah.
ECO and that type of stuff. My soapbox, I guess, is this whole acreage shift and what does it mean,
Yeah.
for us this year? Because I'm with you. There everything you point to is
Hmm.
telling you to grow. It's telling the farmer to grow corn.
Yes.
From a a return, an ROA,
Yep.
or some kind of crop, on the crop side. I mean, we've had the crop insurance discovery price around 470. That puts us either at or slightly above break even. Our discovery on the beans 1054, that's still significantly below cost of production of a lot of the
Hmm.
profit managers and
Yep.
stuff we're seeing. So like, we're seeing on the corn side, we're seeing, almost around a 20 to $50 an acre,
Yep.
profit, and around a $70 an acre loss on soybeans.
That's what
And this discovery hasn't changed that much, so I mean, this is, it doesn't give you anything. So I guess what I'm saying, I'm trying to wrap up my soapbox here, Steve. What I'm saying is that, it looks like acreage shift is going to happen. It looks like, as people
Yeah.
finalize their projections or start looking at some of that, corn's going to be, it's going to be the profitable crop for a bunch of us row
Hmm.
crop farmers. And
Sure.
so if we switch and we move, I'm with you, is that, hey, that's fine that we do. We're all doing it for an economic reason, but you got to start pricing. And when does
Yeah.
it make sense to do that?
I'm going to take your soapbox and Chris's soapbox, and we're going to smash them together real quick.
All right,
When
go
you
ahead.
look at when you look at the insurance side, and we'll take corn specifically, and we start looking at that 470 area. Okay, 30 out of 30 years. Okay, pretty decent odds.
Yep.
30 out of 30 years, at some point in that marketing season, we have seen futures pricing now get back to where that is. Okay. So at 470. So at some point, we're going to return that December crop back to 470, right? 30 out of 30 years we have. So it's a pretty good odds. We can't say that it's absolute, right? But there's pretty good odds, right, that we're going to see that again. To your point, right? What are we looking at? What should a producer be doing at that level? Because I could tell you the emotional side of the market, Jeremy, absolutely throws me off. Because by the time we get to 470, you're going to start to see the producer get bullish.
Yeah,
And he's
yeah,
going to say, man, we got to get by it. I go through these conversations every day already, right? We've got to get bullish or we're going to come in and we should be buying. Markets needs to go higher. Okay. When we take new crops specifically, and let's talk the acreage side for just a hot minute, right? If you've got 94 million acres and we are using a 181 average yield, now we can argue the yield thing here in just a minute. But if
yeah,
we're going to take that 94 million acre number and you look at that, what does that carry into a balance sheet? That's saying that demand is roughly going to stay the same. We can question that. We can also question the feed usage, right? When you're at a tight a tight supply in cattle, as tight as 1950 something, I forget the number.
yep.
But we have a very tight supply for cattle right now. Are we really going to need the amount of feed? We know the efficiency is better for ethanol, so we're going to use less corn for ethanol, right? The balance sheet currently stands roughly about a 2.1 billion carryout. Okay, so when we look at what that means for us, that gives us a harvest low on over a 2 billion carryout down at $3.85.
Yeah,
Okay, so I get the insurance side and I get the farm side, but the thing is, though, and this hurts to say, and I'm just going to say it, but it does hurt to say, the market doesn't care about farming.
Yeah.
Because it can get, when we talk about where we're at, the supply is going to outweigh anything else that we're going to do. So when that supply, if we're talking that and we're talking a 2 billion carryout, imagine, Jeremy, what's going to happen if it comes out at 96 million.
Oh, yeah, I know.
You know what I
Well,
mean?
I mean, you
Yeah.
you had talked a little bit about it at
Yes.
a seminar that I was at. I
Yep.
mean, just run through that real quick because that is
Yeah.
just unbelievable to me.
So, and really what it is that when you look at, and we're conservative, our number's conservative, and we're going to use the conservative USDA number at 94.
Yep.
Okay. It does not matter. You can almost take a hit, a 10 bushel hit off of the balance sheet, a 171 number, leaving everything else on the balance sheet at 94, right? And everything the same, demand wise the same. And we're still going to be looking at maybe a 1718 carryout, which is about where we're at. We're actually less than that now. We're at a 15 now.
Yeah.
So when you look at that, this year going into this year will not be about what that yield outcome is. It's going to be about what the first and official numbers are as far as planting acres. Because if
Yeah.
we start seeing that, if we keep everything the same and let's go the other way at 96 million acres, now you're talking close to a 2.3 to 2.4, gets you closer to $3.50 on the board. That's
Yeah.
not with basis. So
Yeah.
it's important. You've got to understand that. So when you're like, hey, I'm bullish, but to what? Oh, maybe another 5 to 10 cents. That tells me we better start doing some marketing,
Yeah.
right? This is a year that we do not want to mess around with
No, I,
tariffs, with everything else. Jeremy, it scares me. And I
yep.
really, what do we think the upside might be? $5? So we're going to argue over that last 30 cents when we got $1 it could break.
Yeah.
Guys, we have to understand that. And that's just something that, we have a decision to make. 30 out of 30 years, we've gotten up to that insurance price. That's 470. We got to know that. But we need to be selling, don't buy it.
Yeah.
And so that's kind of the break.
Yeah. Well, and Agview will say this too, this is, if you know your cost of production,
Hmm.
then you know a lot better whether if that 470, whether that's a good price or not. When you don't know your cost of production, it's all on feel. And and so no, first step, know your cost of production.
Really good point.
Yeah, know your cost of production, and then the second point is that if you've got a profit in mind of what you think you need, to live to next year, let's go ahead and start putting some of those offers in, so that if that hits in the middle of the night, you got an offer that's picked up. We're not sitting there waiting, or something that you can back out of, like you said, when
Yes.
you're like, okay, all right, now it's at 470. I'm pretty bullish it's going to 510.
Yeah. Yeah.
Lock the profit in. Let's move on.
Well, and that's the difference between coming in. If you're just going to cash sell, there's a lot of ways you can lock this in, right? If you're going to make cash sales, that's one thing, right? But that's kind of a final thing.
Yeah,
Using the board to your advantage, understanding what that is. It doesn't have to be a tool that's a negative tool. Using the board, but understanding what you're doing when you still own the cash is another thing.
yeah,
So having a good team built around you, not only someone that's helping you with the marketing, someone that's helping you with your insurance, your banker, everybody around you. We're in this, and especially as we started this whole conversation off talking about headlines, you almost need that team around you so much because you can't do everything yourself. And
yeah.
it's just really hard. But to understand what could hit us this year is why it's so important to look at getting some marketing done on this next bounce we got.
Yeah, I couldn't agree more. And great perspective, Steve. Good thoughts. Great conversation. I guess let's flip over to soybeans. I guess for me, this is the other part of my soapbox. Is that
Yeah.
what is the potential, Steve, at some point that this can turn around and be a bullish market? I mean,
Yeah.
if we get to the point where we grow 96 million,
Yep.
and what is there potential for a bullish market? I mean, are we neutral? Or are we still bearish? Is there potential for bullish? I mean, I guess just give me some of your thoughts around soybeans.
Yeah. On the beans, I guess it can be. If there is going to be a market that is kind of the shining light, it might be soybeans. And the reason that it might be soybeans is because nobody's looking. right?
Yeah.
If we are going to start shifting, we're going to shift away from beans to corn. And I'm hearing that not just in the northern states, but kind of all over the place.
Yep.
But when you look at that perspective, and we've got an office that's up in Buffalo, North Dakota, right outside of Fargo, had a great conversation with these guys and what they're doing. You got 7 million acres in North Dakota that goes to wheat, 7 million out of soybeans, right? And the rest is corn. Well, what you're starting to see is up there for wheat, they're not going to plant wheat. It's been very tough the last several years. A
Yep.
lot of condition issues, a lot of vom that's in it, and just can't. They're just getting hit at the elevator. So you've got wheat stashed in the bin, and as they put, going to see some birthdays.
Yep.
We've got beans that are. It's very tough, right? Very fickle. They don't like wet feet. They don't like, I mean, they've not produced the yields in which they've wanted. And as you had mentioned, Jeremy, earlier, when you really understand your break evens, it pencils out better for corn. So
Yep.
let's say we take a 500,000 acres out of wheat and we take a 500,000 acres out of soybeans. That's a 1 million acre increase right there out of North Dakota alone. It might even be bigger than that. So
Yeah.
the soybean picture, though, when we look at where we're at on carryout continues to decline. Why? Because we're using it domestically. Let's take Trump's point.
Yeah.
I think when he's talking about farming in general, he may be specifically talking about soybeans. We are using them domestically, right? We know that our relationship with China is getting worse, not getting better right now. So South America continuing to increase their production year over year. And so the reliance on US soybeans has changed over the last 10 years.
Yep.
But our crush numbers have been fantastic and continue to be fantastic. We are domestic. We are using them domestically. We've got more crush plants coming up in the Midwest over the next couple of years. So there's more stores to deliver this to as well. So we are opening that demand. But if we are going to take away less acres, and I guess to a point in which we can see something that gets friendly, you have some forecasters talking about summer becoming more of a drier bias.
Yeah.
And if something like that happens where we do get a yield hit, because just as I explained for corn, right? If you've got more acres and less yield, it still doesn't matter. But what happens if you get less acres and less yield, right?
Hmm.
That's
Yeah.
something that could happen for soybeans if we don't get trend line yields, but also we're going to take off 3 to 4 million acres for soybeans. Now what? That's going to put us with a tighter supply. Does $10 soybeans work right now, new crop? No, it doesn't, right? That was what your point was. We're below those break
Correct.
even or cost of production. So if you're looking at that and you're looking, how could this thing change? What kind of a net picture can change? That soybean is the one that actually could end up becoming friendly this year at some point. It might take us to get to planting,
Yep.
maybe through it, maybe to see what that summer market looks like. But I think that you've got a good opportunity for soybeans. I'm not selling soybeans down here. I think you've got an opportunity to see something better for new crop.
Yep.
Um, and it might, like I said, to throw a number at it, I don't really want to do that, but I think it's above $11 while we're sitting closer to 10 currently. So, but it could even spark more than that, really, if we start seeing some problems.
Well, see, that's exactly where I'm at, and for you and the listeners and everybody,
Yeah.
I am certainly not saying that while the masses are planting corn, you don't do that. Plant a bunch of beans. I'm
Yeah.
not saying that.
Right.
But I guess what I'm advocating for is that, if you're a person that likes to grow soybeans or you
Yep.
have to for rotational purposes or something along those lines, that I think, that's certainly not a recommendation. This is just me personally on my farm. I
Yep.
think being patient in the bean market could pay more dividends than having, selling out of fear right now.
Yeah. And here's just something to think about too, and not only for beans, but let's just say corn too. If we get into a good planting season, okay, where we see a strong planting pace for corn, the tendency is that whatever number we get on this March 31st report tends to get bigger for corn if we see that strong planting pace. Throw me another bag. Let's keep on rolling. Things are good, right? Let's
Yeah,
just
yeah,
keep and the tendency is that whatever number we get from a planting intentions perspective tends to get bigger for corn. But it does the opposite effect for soybeans, right? A good planting
yep,
pace, you're going to get more corn. That could end up shifting to less soybeans again. So that bean number could get hit on the March 31st, And then as you get toward the end of June, and really as by September 1, you're going to end up seeing a different number. And so that is where, for soybeans, you do have a good story.
Yeah.
If it does break right now and the market continues to kind of grind lower just because of, call it China, call it tariffs, however we have to do it, the first step might end up being just buying some calls. And the reason I say that is because so many times as I sit with producers, is that once you get to a point that is above your break even, guys want to hold on for that next 5 to 10 cents.
Yeah.
If you already have established ownership for soybeans at a much lower level, what you can do is look at making sales against that, and you've already continued that ownership with the options you currently have on. You're just owning it on paper versus actually owning it in the field.
Yeah.
So there's a ways to do that, right? And there's ways, and I think for soybeans, that may be our better step this year to start look at that marketing a little bit different than what we may end up marketing for corn because of the story that we could end up getting here as we go into summer.
Yeah. Yeah. Well, to your point too, I mean, beans got to go a little ways yet before we get there. I mean, I've seen, I'm in Northern Illinois, so put it in perspective. That I'm right on the Illinois-Wisconsin state border. We're seeing a lot of break evens on soybeans in that 1150 range. And so, but we I think what are we 1054 is what the spring discovery is on beans,
Yep.
and so roughly we got $1 to go to get to where we're above break even. Can it get there? Can it not? I mean, I certainly feel more like beans have got a better story of gaining, getting back to the break even than corn does going to $5.
And here's just a confusing thing that we can kind of throw a little wrench at it too. When you look at, let's just talk fund positions, right? Big managed money, what are they doing? They're holding a massive long position for corn yet.
Yeah.
They're short soybeans. What? If things are, as we're saying, we actually want to be selling corn, maybe buying beans, doing the absolute opposite of what this managed money is doing. But think about it. If in that $1.50, dollar plus right now out of soybeans, that new crop beans, if there is a reason that does arise for them to come into the bean market, they don't have to get out of corn. But what we can see them is build that position for new crop beans, and that could carry us. I do feel that there's a good story, and like I said, I feel like for soybeans to sell beans down here makes no sense as we're talking.
Yep. Yep. All right. Well, I guess let's shift to anything else. I mean, we could cover wheat, cattle, hogs, whatever
Sure.
you want. Maybe we got about 5 more minutes before we wrap up. I guess I'm going to leave it to you, Steve. You cover what you think is the most important to talk about after corn and beans.
Oh man. Well, thanks. Thanks for throwing that at me. But so there's a lot to cover actually, and I'll try to be quick and we'll cover a couple topics. First off, for wheat, right? You've got right now this tariff that's kind of pushing and pulling on the wheat market. Wheat made some new lows last week off those lows. But if we start to see some of this drier bias come into the spring, that drier bias looks like it come into that Oklahoma, Kansas area, up through Nebraska, up into that South Dakota, North Dakota region, right? So we may want to be looking at, and you could see that Kansas City wheat start to find more trouble, and that may end up supporting KC wheat versus where you're looking at more of that Chicago style wheat, which is your Illinois, Indiana, as further as you go east. Plenty of moisture is what they're looking like. Pretty good growing season. But what you're going to start to see is the divide between the two may end up pushing Kansas City higher than Chicago. So just from a spread perspective, you may want to look at buying that KC, maybe selling Chicago if that happens. But something like that you can stay into. The wheat market it is amazing because it will go any which way just because it's wheat. So
Yeah.
looking at it from a spread perspective may be a little bit better if we start seeing some of this drier stuff come through.
Yep.
The bigger thing that I want to talk about is the cattle market, right? I'll dive into that. I mean,
Yep.
you look at what we've done here just in the past several weeks for cattle. We were pushing new highs. Next thing you know, tariffs were coming on. We came down. We sold off quite hard after. We're now back to about that 50% retracement level. So taking that April cattle, we did see cash cattle trade today. There was some cash that traded above $2 out in Nebraska. That's fantastic.
Yeah.
So when you look at that, we'll see what that average cash trade looks like. It might be just around that $2 area, but here we are. Tariffs matter when it comes to cattle, and specifically for feeder cattle. 5% of our cattle come out of Mexico. feeder cattle come out of Mexico. If we start to see tariffs go back on, that may actually be friendly for cattle because now we're buying feeder cattle at 25% higher. So
Yeah.
watch for that. That mentality right now in cattle market is pretty crazy. But you look at what it is, the cash market and futures now have caught up. So from this point moving forward, tell me what the cash market's going to do, and the futures are probably going to follow. So that
Yeah.
emotional roller coaster has been put to bed now that we finally met where we needed to be. So kind of be careful of that for cattle, but moving forward, that's kind of where we're at. So, but a heck of a ride. It moves fast. We know that. So if you're speculating in that market, be very, very careful. But looking at it from a hedge perspective, as we continue to get a little bit higher than where we're at, and you see the futures maybe getting over that cash market, we may want to look for some hedges to be put on as well.
Yep. Yep. Well, the cattle have been on a heck of a ride. I know a lot of people are
Yeah.
like, when's it over? And
Yep.
it's continued to be strong.
It has been. And there's no doubt. I mean, when we talk about just less numbers, I mean, that's an
Yeah.
impressive figure. When we've got the least amount of cattle in the US going back to early 1950s, I mean, it's tight.
Yeah.
So, it does matter. But we've known that. That's in the market already. So, but from anything that could shift this thing either side moves in a big way.
Oh
So
yeah. Yeah.
anyway.
Cool. Well, I'll tell you what, it's been a great conversation. Going about, getting to the point where we probably should wrap this up. I'll give you the last word. Anything else you got for the listeners here?
Yeah, the big thing is, as I mentioned before, and I truly mean it, you've got to surround yourself with good people, and people that really that could be your eyes and ears in the market. As a producer, you don't have to do everything yourself. And so as we make these talks, I like sitting down with people, putting in specific marketing meetings for people because it matters. What you might hear might be for one guy, something else might be for another, but get good people around you because it really does matter. In a situation when you're teetering on the border of break evens, am I making money this year or am I not? The guys that have a good team around them are doing better than the guys that aren't. So, I really want to push that and say, get your team, understand that, and, let other people help you make some of these decisions because they're very hard.
Yeah.
So, and I wish
Yeah.
everybody luck out there.
Well, thanks a lot, Steve. I couldn't have said it better. Great insight on the last word here. So, glad to have you on. Would love to have you back again sometime soon.
Absolutely.
So for the listeners, you just listened to Steve Georgy, president of Allendale Inc., and I really appreciate your time.
Thank you very much. Thank you, listeners, as well. And, be glad to come back anytime.
All right. Thanks, Steve.